Ladies and gentlemen, Tony is from Crow, Australasia. He's got 30 years experience working in taxation. And Tony, I thought today, given the interest in JobKeeper, I was just wondering, since the legislation has come through, etc., that predominantly we might hone in on what you've learnt in relation to the developments of the legislation and how people will be able to identify whether they actually qualify for JobKeeper, etc., and what you've learnt from a taxation point of view. For those of you who are on this webinar as well, Jordan and myself and Emma from the Workplace Relations Department, we will be doing a Workplace Relations JobKeeper at 2 o'clock today. Again, updating information that we've received from the legislation passing the House last week about the actual processes employees will go through with their staff. So we'll do that one a bit later. But without any further delay, I'll hand over to Tony and we'll get started. Thanks, Tony.
Thanks, Jason. Yes, look, at the end, just prior to the Easter break, the government released the rules around the JobKeeper allowance or payment. In terms of the broad requirements, there haven't been a lot of changes since the fact sheets were issued sometime earlier that week. So it's still the key things of whether you have turnover of 1 billion, pretty high number, but 1 billion or more, in which case you have to show more than a 50% downturn in your revenue as a result of COVID. But probably of more relevance to people like yourselves, being electrical contractors, that it's really, we're dealing with a situation where you've got a more than 30% downturn in your gross revenues as a result of the COVID situation that we now face. From a very broad perspective, eligibility requirements haven't changed, although there's been a little bit more detail now around the specifics of how an employer needs to act in a way so as to comply with the relevant rules. So there's a lot more clarification now around who is an eligible employer and what do you do with when you have, or do you have, eligible employees. From the critical point, you still need to have had the employees on the books as at the 1st of March 2020. If an employee doesn't meet that basic requirement, then in respect to that employee, they are not eligible. The only exception to that is if they were on your books as an employee as of the 1st of March 2020, you subsequently had to release them, terminate them, stand them down. But so long as they are then rehired, and they can be rehired and immediately stood down, so long as they are still an employee on your books as at any key qualifying point, then they are still eligible, or they're still an eligible employee. Probably the thing that is going to cause the most issues, I think, at the coalface, that is, look, I've got an eligible employee, they meet the other requirements. For example, they're over 16, Australian residents, a New Zealand resident on a 444 visa. As long as they meet those basic eligibility requirements, then as an employer, how do you ensure that you meet, and it's been classed as the wage condition, and this is the one which I think is going to be the most problematic in terms of complying with, because the requirement there is that when you have somebody on your books, you actually have to have paid them by the relevant payment date, and that date is each fortnight. So, for example, the first payment date to prove that you were complying with the JobKeeper requirements as the employer would actually be today, although technically it was the 12th of April, but the 12th of April being Sunday, and then today being, or yesterday being a public holiday. You need to have made that payment by at least today. So that $1,500 has to have been paid. The next critical date is by the 26th of April. So as you can see, what's happening is every fortnight, you as the employer have to have made that payment by that due date. That then entitles you to seek a payment equal to $1,500 as a reimbursement of the wage or salary and wage that you've already provided to the employee. The critical issue there is, I mean, everybody's facing cash flow issues. So in terms of how you then fund it, the issue has been sort of somewhat glibly dealt with by the government, and in also an explanation in the rules and the fact sheets is that, well, you'll fund it from your current revenues, your own cash flow, or you will actually need to have some sort of arrangement with a financier so as to be able to make the payment. So from that point of view, you need to have in place those sorts of arrangements, and you need to be able to certify that the payments have been made by the time each fortnight comes around. There's also been a little bit more clarification. So if your payment cycle is not a fortnight, but let's say it's monthly, then you are able to align your payment cycle with when you have made the relevant payments and remain eligible for the $1,500 per fortnight as a payment. That sort of the discretion in how that is going to be administered has been left open to the Australian Tax Office, to the Commissioner there, to specify the specific rules that will apply. But once again, you still do need to have made the payment by the end of, or before the end of that particular month. So if for example, your typical payment cycle was ending somewhere around 27, 28, 29, 30th or 31st of the month, you may need to think about bringing that forward to comply with and align with the payment being made within that 4-week period. Failing that, we're hoping to see a little bit more leniency come through with the way the Commissioner will exercise his discretion to treat a payment as made. But in essence, that is how the government and the Commissioner have determined that this is going to be administered. So the problem will be ensuring that you actually do have the cash flow to be able to make the payments.
So Tony, in that respect, it really is a situation that it's a reimbursement and that the payment had to have been made. So there are a number of short-term loans, etc., that the government is offering, both state and federal. And people may want to consider those to actually make those payments. I think what a common question will be from a lot of our members, they may have stood down people in mid-March. They may make a payment now and make the $1,500 a fortnight, say from mid-March, or even going back to the 1st of March. will that still qualify for them for the full payment from the 14th of April? Sorry, the 12th of April, as you said, in that respect. So will they get that sort of, is it 6 weeks, or is it actually is it from the 1st of March?
30th of March is the key date. So they have to have been employed on the 1st of March, and then the payment periods start on the 30th of March. So literally it's rolling forward a fortnight from the 30th of March. So that's when you need to have made the payment for. So if it was in respect of a prior period, then that doesn't qualify unless, for example, you happen to be doing, say, a fortnight in arrears, a fortnight in advance.
Okay, so if we've got a situation for a lot of our members, they pay weekly, and they would have paid wages. They can demonstrate that they've had the 30% loss from last year to this year. They've paid wages each week for it. On the 30th, would they be able to claim a fortnight or just the 1 week that they've paid?
It would be the week. Well, it would be from the start of the 30th of March. So they've paid a fortnight already.
Yep.
Then they would be, and that fortnight straddled the 30th of March, let's say. Then you'd be able to claim, well, what is proportionate for the period from 30 March forward?
Right.
What you've paid for the period from 30 March prior wouldn't count as an amount that would be reimbursable.
Right.
So it is a very hard and fast start date. So we're running here from the 30th of March right through. I think the last period fortnight will end on about the 27th of September. So in there, it's each fortnight. The thing to realise is there will be periods where it sort of will be up and down, if I can put it that way. So one week you may not have the cash flow to actually pay the full amount. The next week you may have more, in which case over that fortnight it evens out to the amount that the minimum required of $1,500. That's permissible. It could even be that you're able to make a catch-up payment in a subsequent fortnightly period to show that was, and then actually say that, well, that actually related to that prior period. I just didn't have the cash flow to make the payment, but it's for that period. But then likewise, that second fortnight, you would end up having to still make the $1,500. So let's say you were able to make a payment of $1,300 in one fortnight and then $1,700 in the next, for which the $200 related to the prior period, then you could have that counted. So there are some unders and overs mechanisms that exist, but you want to have the record keeping to be able to prove that, and that will mostly be through the sort of STP reporting, so single touch payroll reporting that each employer will lodge.
So we've got a question here. Will we get notification from the ATO that we qualify for JobKeeper? We believe we are borderline on the 30% criteria. We currently have some staff on leave without pay and can't let them know yet if they will receive JobKeeper payment because we don't know and don't want to prepay $750 if we are not eligible.
Understand. Great question. The way that it works is it's not just a historical test, it's also what you expect. So if you are and definitely anticipating and your budget and cash flow show that you will be more than 30% down, then that will be sort of an adequate proof that you've met the relevant requirements. So it is both historical, that is, when you apply, you obviously look at if you're a quarterly BAS lodger, you'll look at your March quarter compared to the March quarter last year, but it's also what you're expecting. So you can still register, and what they have said is that there is some leniency. In other words, if you say I'm going to be more than 30% down and you end up being 29% down or whatever, I mean, they're not hard and fast figures, but if you miss it, they're not going to come after you, is the message that is being put out there. The other alternative is you delay actually registration, so you don't actually register immediately, but then let's say come the end of April, you can definitely see that you are down more than 30% in your turnover. You can register at that point. But if you happen to register after one of the key dates, then it's not backdated. It's only from that point forward. So there's still possibility to opt into the JobKeeper system down the track. The other thing to recognise is once you are in, you are in. It's not like if you expect or you can show that it's 30%, then you go to 29, then you go back to 35. It's not like you have to go in and then drop out and then go back in. It's once you are eligible, you're eligible.
Right.
And that stays.
So it's a point in time test sort of thing.
Very much so. Very much so. So in the example for the question that's been asked, if you're uncertain at this point, you may not register for April, or you may not register for the first fortnight in April, but you may do it in the second fortnight, for example, where you are certain that you have met that 30% criteria. But yeah, the message that keeps being put through is they're not going to be hard and fast, but likewise, if you sort of say, look, I'm going to be 35% down, but you end up being 20% down, and it was foreseeable at the time, don't expect a great deal of leniency at that point. But certainly, if you estimate that you'll be 35% down and you end up being 29, that doesn't seem to be their real concern. They're just looking at ensuring that it's not a sort of a fictitious circumstance just to get some extra cash flow.
There's a little bit of a timing issue with the timing of the fortnightly payments. A lot of our members will pay a week Monday to Friday, but the actual pay doesn't go into the bank until the Tuesday, the 14th, for example. So questions come in, does that mean that my first claim, if I do qualify for eligible employees, that I'll only get a week's worth and I might get a bit of a catch-up payment down the track and that I've paid sort of 3 weeks as a group, or do I just continue to be that sort of little bit out of sync with the pay fortnight?
Yeah, once again, another great question, because they've just assumed that everybody pays on a particular date throughout the period. Look, there is the ability for you to top up. What I mean by that is, let's say you do pay that 1 week, but you can register, but you'll need to be able to show that in the next period when you make your payment, that relates to that 1 week in the lead up to in that fortnight. So you can be paying a little bit in arrears, but you have to show that is because of your particular payment cycle. Just the same as somebody who's paying on a month. You're always going to be sort of out of sync with the way in which it runs per fortnight.
One of the questions from the members at the moment is that they've registered, but they haven't heard anything apart from the initial confirmation back that they have registered. My understanding at this stage, there hasn't been any further notifications come out from the ATO. Is that still correct?
No. Look, this is a brand new system that's been set up. So as far as the only thing you could have done was register an interest in it. In the next sort of couple of weeks, the system then where you are requested to confirm your eligibility and also the eligible employees, because remember, it's not just about being an eligible employer, it's the fact you've actually got eligible employees. So that process, whilst we know it in outline, we know sort of some of the specifics from the rules, how that's going to administratively occur just hasn't been seen, hasn't been sort of resolved.
Someone's just asked a question here. My recent pay fortnight ended the 5th of April. Do I need to adjust to a different fortnightly period? Look, I wouldn't be suggesting that people change their fortnightly periods. It'll just be a in arrears adjustment that you'll make with JobKeeper once it's up and running, like it would be any other sort of monthly payment or invoice, etc., that you'd be claiming on builders or customers, exactly, for example.
Look, absolutely. The only reason you may want to adjust your pay cycle is just to make the administration a little bit easier. So that would be the only sort of reason you would really want to do that.
Keeping in mind that from an industrial point of view, you're going to have to give them at least 4 weeks notice of that change. So yeah, the benefit may outweigh the uncertainty that you give the employees about changing pay cycles and things like that as well.
Yeah, and the key thing there is that the process that the ATO, because I mean they're going to administer this, outlines as to how he's expecting you to adjust your reporting so as to be able to prove that you have made the actual payments in respect of that fortnight.
Yeah. Okay. All right. So just one last one before we move on. So if you've got casuals and apprentices that haven't been paid the full $1,500 in the fortnight to the 12th of the 4th, but all the full-time employees have been paid, can you claim for the employees that have been paid to date? My understanding is that they would claim for everybody, and that the employees who didn't reach the $1,500, you would then do the top-up payment when the payment came in to make sure that money, they reached that $1,500. Would that be correct?
Yes. You have to, the thing is, you have to pay the $1,500 at some point, and you have to be able to prove it relates to that fortnight. Yep. So that's a key requirement in order for you to be remain eligible under the scheme. And they spent a fair bit. There's a Treasury released a pretty substantive fact sheet on some of the sticks that are there to sort of ensure compliance. So you certainly do not want to be short paying, and you want to be able to prove through your own record keeping that payment relates to that fortnight.
Yeah. So given that casuals and apprentices would qualify as a JobKeeper recipient, it wouldn't be unexpected they would get paid less than $1,500 through their normal wage and super, etc. So it wouldn't be unusual for that money to then appear as a second deposit through the company's accounting system and payroll system to those employees, and it relates to a particular week or fortnight. You'd actually note that on the payroll system and in your accounts, etc. And that should be proof enough that it was expended on the right areas. Absolutely,
absolutely. The other thing just to remember here as well is that each employer has to notify each employee that they are in receipt of that payment, or they're eligible to receive that payment. So in one sense, that sort of statement you said that you give to the employee should actually reference back to this part relates to that fortnight. And that would be adequate. But you're going to have to do it, obviously, each and every payment cycle. So that there's a proof there.
Are there obligations on the employees to advise the employer, say for casuals, particularly in our industry, that are receiving possibly more than, or who can qualify to be more than one JobKeeper payment? Is there mandatory requirements there for employees to keep their employers advised?
Absolutely.
Yeah.
Yeah. No. Absolutely. The employee has to let their employer know that they are the one through whom they are seeking JobKeeper, and that they are not eligible with any other employer to receive the JobKeeper payment. One thing that they do outline in the rules is that there are a number of people who are full-time casuals or permanent casuals. The preference is that if the person has a permanent job, they're either permanent full-time or permanent part-time with another employer, they should be the ones through whom they seek the JobKeeper payment, not through their casual employment link. So, but once again, they do need to confirm to you that they are eligible to receive and that they don't have a JobKeeper payment being received from anywhere else.
We might put up a bit of a pro forma for our members to use to get the employees to sign off that they're only in receipt of one, just to make sure it's nice and clear for them.
Yeah. Look, and just on that point, because some of the people may, because they've been sort of stood down, whatever, they may have actually applied for job seeker as well. The one point to realise is the onus is not upon the employer to sort out whether they're entitled to JobKeeper or job seeker. Job seeker is the allowance that's basically administered through Services Australia, whereas JobKeeper is what's being administered through the tax office. If one of your employees happens to have job seeker, the onus is upon them to go back to Services Australia and sort that out, not the employer.
Question that's just come in basically saying, can we claim JobKeeper if people are on annual leave, RDOs or accrued leave? Yes, they can, as long as the payment's being made, whether that's coming from their annual leave or from accrued days off, etc. The payment's been made. So yes, it's all seen as remuneration according to the tax office and for the JobKeeper. So yeah, so there wouldn't be any troubles about recognising that. So if that's what's been happening since the 1st of April or 1st of March.
No, it's just the difference will come down to where you're having to provide for superannuation or not. Yeah. So if they're on annual leave or they're using any of their accrued leave entitlements, that's just ordinary salary and wages, and under the normal superannuation guarantee rules, that's subject to super. So there's a 9.5% super that needs to be provided on that. But if they're already they're already stood down and they're not being paid anything at present, then the JobKeeper is that's all that needs to be provided. There is no super guarantee liability on that.
Just to be clear, because this question's sort of come up again, if they haven't made a payment to an employee, they won't be able to claim it on JobKeeper. So those people who've been stood down or on leave without pay at the moment, and going back to our initial point of you have to have the cash flow to pay the $1,500 and or wages to start with. And if you don't have that cash flow, then JobKeeper, you may not be able to actually get those people back on the books, and you will have to push them towards more job seeker and Services Australia.
Oh, look, absolutely. It's JobKeeper, and this is where I suppose it was the frustrating part of the announcement, is that the answer was, well, the banks, financial institutions have been approached. They're quite willing to provide short-term facilities where it is backing the JobKeeper payment. So it wouldn't be for normal business cash flow. It'd be purely for the temporary funding of the JobKeeper payment. So that is out there as sort of the government position. The reality is actually going to whoever's providing your short-term credit facilities and actually saying, well, this is what I want to do for my employees. Are you prepared to fund it? And likewise, you'll probably have to enter into some undertakings that the monies that are advanced are only used to pay salary and wages up to the $1,500.
One of the questions that's coming is about public holidays. Look, the public holidays are paid as per normal, in terms of your normal awards. Yes, that will count towards the payment of JobKeeper amounts, so yes, it will qualify. So
the one thing I would note is with public holidays as well, it is ordinary time earnings. So once again, you may have sort of differing pay arrangements, but if there's a public holiday in there that a payment is made for, then that is ordinary time earnings. So once again, that's subject to super.
And that would then also qualify about that money being counted at the included in the 1,500. So if you've paid it, and they haven't reached that $1,500 limit, then you've got to top up, etc. And if it hasn't been included and it's their normal wage, then it's a subsidy on that 1,500 anyway. So
no, very much so.
Yeah, it's very important. I know it gets confusing for a lot of our members in terms of if you can really think about it as a reimbursement of your expenditure, and that your wages, salaries and wages are almost separate, and the $1,500 is there as a subsidy reimbursement, but it's there really as a situation of just trying to make sure that it's being reimbursed, or that minimum earning level of $1,500 for those who don't reach that $1,500.
And that's why it's sort of like if you've got your apprentices or your casuals who are earning less than $1,500, they're still entitled to the $1,500 under JobKeeper. So that was a key feature of the announcement.
So Tony, in respect to the actual process, like people have nominated their interest, what are the steps we can expect maybe that the ATO will come out with from here? We've nominated an interest. Will there be another application process? Will there be a process that people will be notified that they will have to fill out and nominate, yes, they do want to be considered further? Or what are you hearing at the moment about that sort of stuff?
Yeah, no, one of the obviously the key features is you have to be able to, as an employer, say you're going to be more than 30% down on your revenues. So there'll be a declaration that is going to be required from each employer. So what we're expecting to see, certainly in the next fortnight, because I mean the next critical date is the 26th of April, is the way in which each employer is going to have to sort of, one, notify that they are eligible. So they are eligible on the basis of their 30% downturn. We're still waiting to see the alternative ways in which the Commissioner will assess applications where there are unusual circumstances. So where, for example, your turnover has actually gone up, but it's only because you've had a combined business over that period. So those sorts of things are still to come through. We're still to see how the Commissioner will actually release alternative rules. But likewise, in order for you to receive the payment, you actually have to notify the Commissioner who are the eligible employees. So and what we have been told is that the Commissioner will use the single touch payroll records that he has, and he will pre-populate the fields for what he believes will be your eligible employees. But don't assume that because they're in the form that they are eligible. The employees will still have to confirm their eligibility. So the Commissioner doesn't know whether an employee is or is not an Australian citizen, for example. It's just a name. So there's still a process to be gone through. You'll need to the employer will need to be able to confirm that they have or they will have made sure that the payments have been made so that they can get the reimbursement. And then for anybody who hasn't yet notified things like bank details to the Commissioner. So there are certainly a lot of taxpayers out there who haven't, but you'll need to provide some bank details because this will be an electronic transfer. So that sort of information is what we're expecting to be on the form when it is released. It will be electronic, as we understand it, so it's not going to be a paper-based process at all. That's what we're expecting at the moment. So there's still a lot of the administrative side of things, sort of the real, this is what I have to do, tick and flick, to be able to apply, that we just haven't seen yet.
Couple of questions, I suppose, and particularly interest for our members is sole traders and directors taking drawings. Has there been any more developments on those, do you think?
Apart from the confirmation now that where you have I'll go deal with the the director companies first.
Yep.
There's just been the confirmation there that where you have a principal director, that is, they are the active person in the business, they will be entitled to apply and be included as an eligible employee for the purposes of the JobKeeper. Similar position with partnerships and with trusts. So if you have a trading trust, the principal beneficiary will be able to be nominated.
Yeah, that's good news, because that's certainly something we've been advocating for here for across the government for quite a couple of weeks now. So that's great to hear.
Yeah, but bear in mind it is one only. So where you have a true trading partnership, that is two people who are principally involved in the business, there'll be a choice that will have to be made as to who gets the payment.
Yep.
And who is added and who doesn't. How that may be divvied up after would be another issue, but it will be taxable income to that party that's in receipt of JobKeeper. So they need to keep that in mind as well.
Yep.
From sole traders, once again, you'll need to register. You'll need to use your ABN, and that's the way in which it will be tracked. So you'll then, as a sole trader, you'll receive you'll register for yourself, you'll get the payment for yourself. If you happen to be an employer as well, then you could have eligible employees who will be included in that list for whom the JobKeeper will be paid. But it's a slightly different process, but very much so. It's still, you'll have to register, and you do so through your ABN.
Yep. Someone's just asked a question about creating a new payroll category in their payroll system of JobKeeper payment. I actually think that's probably not a bad idea. That if you've got the ability to change your payroll system to have that put in, that's probably not a bad idea for yourselves. And then you can decide about the superannuation situation with it as well, and how you're going to treat that for super purposes, etc., and whether you include that in your ordinary time earnings as well. So
yeah, just make sure in terms of the way you set your payroll up, though, that you do take into account things like your super.
Yeah.
Because it's a nondescript sort of payment term, and you'll have to make a call as to whether that is ordinary time earnings or not.
Yeah.
Or is some of it or part of it, all of it or none of it subject to super. So how you do that, maybe you end up with 3 categories of JobKeeper payment. Yeah. One which is ordinary times, one which is at least 2 part which is not.
Yeah. Interesting one that's come in. If we get to the point where a large an employer has to make people redundant, even if they are keeping up with the JobKeeper payments, the question being, are redundancy payments part of JobKeeper? So would they get reimbursed? I hadn't turned my mind to that, but if it's severance pay as opposed to notice, I think the severance pay is after the termination has been effected, so I wouldn't expect that you'd get that, but I'd have to get some checking from yourself. But certainly the notice period, if they worked it, would be covered. I'm not sure about if that was payment in lieu of notice, but.
Look, great question. And it's actually not one that I've actually seen discussed today. Because most of the discussion is around, look, I can't afford to keep them on, but I'll stand them down instead. Yeah. And that's sort of what JobKeeper is about, and that's what it was sort of designed to do.
That's right.
As opposed to actually having to take somebody totally off the books. My inclination is that those sorts of termination payments are classified differently. They're not specifically salary and wages. They're actually dealt from a tax perspective quite differently. From an industrial relations perspective, they're dealt with differently.
Yep.
And I suspect probably not, because it's not in keeping with the sort of the underlying policy intent behind the JobKeeper payment.
Yeah, I think you'd be on safe ground with if they've worked their notice period.
Yes.
Which would be a vast majority of our members, because most of them don't have more than 15 employees to implement the severance pay component. But those who do have more than that number with severance pay, I really couldn't see the severance pay being covered by JobKeeper at all.
No, it's not consistent. But as I said, look, I'll take the question on notice as well and get back to you so that you can distribute something amongst the members.
Yeah.
But my inclination is it wouldn't get included.
Just very quickly, someone's asked, is it assessed quarterly, weekly or fortnightly? Depending on what you mean by assessed, as we said previously, it's a point in time test. Once you qualify for JobKeeper, you maintain that qualification. So it's not reassessed into the future. So
yeah, and in contrast to where the thought was you had to actually register effective from the 30th of March, there is some latitude. So now, if you don't believe you're going to sort of qualify for the first couple of fortnights in the cycle, you can still subsequently register for future cycles, but you can't go back. So there is still some element of flexibility there. So if things don't quite happen as a planned and we don't come out of it as quickly and you end up qualifying, that is, you end up with more than 30% drop in revenue, then you can subsequently register.
Actually, this is one I hadn't actually thought of. Subcontractors. We get that strange situation in a lot of our businesses where you've got subbies who we pay superannuation for because they're predominantly using their labour.
Yep.
And work cover, etc. And probably payroll tax would be a bit of an interesting one. However, including them on their single touch payroll submission was too hard, so they actually don't do it on the single touch payroll. That's an interesting one. How would that one sit? Have you heard any discussions about that one?
Look, once again, a great question. The way that has been answered is whoever is the principal employer is the one who is entitled to apply for JobKeeper in respect of that employee. So if they're a subby, then by very nature of its name, the contractor is actually the person who's engaging them. And if they are an employee, it's going to be the head contractor, not you or not the subcontractor. So, for example, it was put in the context of the employment agencies and who is the employer, because if I engage an employment agency, I'm really paying a wage, I'm paying for their super, I'm paying for their payroll tax. Yep. The answer that came back is that it's actually the agency who is the employer.
Yep.
So, sort of similar analogy. The key point is it has to be an employment arrangement as well. So,
yeah, we get, from an industrial relations point of view, the point towards paying the superannuation and also the work cover we would suggest point towards it being classified more as a employment relationship, because we have a lot of trouble with a lot of our members. They start off with a friend doing a little bit of work for them. They get a contract or they get a big job, and then all of a sudden that person, they're being told what to do, where to do it, how to do it. Sometimes providing the equipment. So really, we've gone from a subcontracting arrangement really into an employment relationship, but it's being paid as an all-up hourly rate. The invoice comes in, and the only invoice that's come in is for hours worked. So it's ostensibly an employment
agreement. Yeah.
So would that? So you'd still think that would be covered in that respect?
I suppose a couple of things to note is, once again, that that arrangement would have had to have been in place on the 1st of March.
Yep.
So if it's something that's arisen subsequently, won't qualify.
Yep.
But if on sort of basic principles, you'd say that they're an employee, that is, you do control their hours of work, what they do, how they do it, where they do it, the time that they're allocated to do it in, all those sorts of things. They're very much pointing to an employment relationship. And once again, we're going back to who is an employee. So if for example, the arrangement was simply to install X number or X amount of wiring or whatever, so it's an outcomes focused agreement as opposed to a services agreement,
yep,
then those sorts of outcome agreements are moving further and further away. Whereas something where what they do and how they do it is very much controlled by the contractor, the head contractor there, then you're probably getting more down towards that employment relationship than employee-employer relationship. The one thing you'll just need to be sort of mindful of is if that means there's a change in treatment that's going to occur in your own books, be prepared that you'll need to explain that as to why it was being treated differently before, and yet now it's been treated in a way that entitles the person for JobKeeper. So there would need to be some factual reason for the change. Otherwise, you'll be having to explain what happened in the past.
Yeah. Again, we've got just a bit of a quick question on SGC, superannuation guarantee. I've heard conflicting messages. So look, for full-time employees above $1,500 and you're paying them more than that amount, superannuation guarantee will be treated as normal.
Correct.
For those people who are getting the flat $1,500 JobKeeper, again, it's ordinary time earnings. So again, SGC is payable on the $1,500.
Yep.
In terms of those people who are getting paid less than $1,500 but are getting topped up, SGC at the bare minimum applies to their ordinary time earnings that they are paid. The SGC is optional for an employer to pay on the difference between their normal gross income and the $1,500. So,
absolutely.
Yeah, so I think that's...
And the other thing is if the person has been stood down, then the $1,500 is not super at all. So it's sort of like, once again, go back to basic principles. If the payment or part of the payment that has been made relates to ordinary time earnings, that's subject to super. If it's not, it isn't. So very very basic rule.
Yeah. So no. Yeah. Well, sorry, I'm just reading this last question that I've got from Ruth. If your employee qualifies for JobKeeper, but you subsequently decide to wind up your business, would you have to pay back JobKeeper? You haven't kept their jobs.
No.
I'll let you deal with that one.
Look, it's both a historic and prospective test. So if you once again get to the point where you're going to wind up the business, whether that means formally, if you want operating through a company, so putting it into liquidation, or personally you just wind up the business, then you can't claim prospectively for any future payments. But what's happened to date is fine because you've had an ongoing viable business that has been in hibernation maybe, or partial hibernation. Once that decision is made to wind up, it is to terminate the business, bring it to a close, then you no longer have the requirements to be an eligible employer. So you can't make future payments or claim them, I should say, at all. So it's one of those things, if there's a decision to terminate, you can't make or you won't be eligible to make the claim for the reimbursement. What this is intended is to actually, I suppose, provide a lifeline to businesses so that they don't actually have to go into a formal wind-up or liquidation. So you don't actually have to be doing anything during that period you can be in full hibernation as a business and still be eligible, so long as that decision to terminate or wind up hasn't been formally made. But as soon as that happens, it's a different ballgame.
It is. Any thoughts on, and we've sort of touched on this in previous webinars, any thoughts on the action to prohibit winding up of organisations for less than $20,000? Have you had any sort of feedback about that, whether that has saved businesses at the present time, or it's likely to save businesses?
Look, to be honest, I haven't heard a lot of feedback. There are certainly a lot of businesses that are looking to appoint administrators at the moment. So I certainly know that there's been an increase in those sorts of inquiries. Whether that formally moves through to actually winding up business, well, I think probably we'll start to see that in the next 2 to 3 months as to what happens there.
And there'd be a big difference between voluntary administration versus forced administration. Again, I'm no administration expert by any stretch of the imagination, but I presume that if it's a voluntary, it's done by the directors, but if it's forced, it'd be someone who is owed more than $20,000 approaching the courts, and then the government has put a 6-month moratorium on making a decision on those wind-ups.
Correct. So, look, the key area there is an administrator doesn't actually formally wind up a business. It's all it's saying is, I'm not sure about the future of this business, and formally it goes into the administrator to look at it and sort of make an appraisal and work out where to go to. The key issue about voluntary liquidation is that the directors actually have to, before they put it into liquidation, actually testify to solvency, which sort of in this sort of current environment, if you're not sure that you can pay the debts as and when they fall due, you can't make that statement. So the only alternative there is an involuntary liquidation process.
Okay.
So the fact that we've got the 20,000 threshold and the 6-month sort of moratorium probably gives that little bit of breathing space. And to go with that, there was some concessions made for directors about solvency during that period and continuing to trade. So there's a lot more leniency through this period, but certainly it's too early to actually see what's going on, other than I do know that there are a lot more inquiries for people looking at, well, what are my options?
Is JobKeeper income for employers, for, I presume, BAS questions and things like that? So does JobKeeper actually form income for companies?
No, it's treated as an exempt payment. So from that point of view, it's totally tax-free at the employer level, and at the employee level, it's just salary and wages.
Yeah. Beautiful. Okay. Well, Tony, I think, look, time's beaten us. It's a little bit before 1 o'clock, but we really appreciate your time. And we've still got the slides from the other days, which we've put up for members to look at. For those of you who are online, as I said, Jordan and myself and Emma will be doing a IR sort of focused JobKeeper one kicking off at 2 o'clock today. And if there's a lot of demand, then we'll probably rerun that. I think we've actually rerunning that on Thursday or Friday. I can't remember which. But look, if there are any further questions, please let me know. And Tony, appreciate your time and for Trevor's time the other day as well. And we'd like to thank Crow for their assistance through this time. And a lot of our members have appreciated the help.
Look, it's a pleasure. And as I sort of, in the slide pack that's there, people will notice that there's a sort of a resource page that's there that anybody can get into and have a look through and use for themselves in terms of what's there. It's no obligation. It's not like there's a fee that you have to pay to get on. It's all there for anybody to freely access. So, and that's certainly where things like this JobKeeper, the changes that, well, the rules that were announced on Thursday evening, where that will end up being updated. So people are more than free to go there.
Yeah, and look, one of the questions has come in saying, what's the best way to go through individual scenarios and get advice? Look, the phone number's on the slides, etc. But if you want to give yourself a plug, Tony, what's the main office number at Crow?
Look, I'll give you it's at the moment, if they're in Queensland, I'm not sure, but it's...
it could be anywhere at this stage.
Yeah, look, I'd have to give you my direct line. It's 3233 3593.
And that's 07.
And that will come straight through to me.
Yeah, that's an 07 code.
And then there's also obviously a general switch number. If you happen to be in another state, that you can ring, and you'll be directed to somebody in your state.
All right, great. Well, thank you very much. And ladies and gents online, I hope you've found that informative and answering a few more questions. Look, we'll draw a line in the sand there and have a safe day, and we'll hopefully see some of you at 2 o'clock. Okay. Thanks, Tony.
Thanks a lot.
Much appreciated.
Bye. Thank you.